we're going to start breaking it up, and we're going to build it up over a couple of different elements out there, right? So let's go across with the very first element out there. And we have got ourselves here is pretty much an income statement. And we have got a lot of this historical input data coming in. And let's just briefly go with what we're going to cover, right? It's going to be a lot of to and fro that happens across the board. So we're going to try our level best to just explain it and structure it as we keep on going across. You've got historicals that happen over the last couple of years till CY21, and we need to calculate forecasts from 22 all the way up to 2025, right? We just went through the report for 2021 to see what's happening. What about the balance sheet? Same elements happening here as well. Again, following a more liquidity form approach, we have tried to take the actual balance sheet in the same structure as they would have taken in for the actual for the IBM's reports also as well. We're going to look at a cash flow statement. So pretty much these were the three major segments that we had seen across in the previous readings, but we're going to have some more elements out there. Let's talk about ratio analysis. That is one factor that comes in. So obviously this is something that happens at the very end where you input in pretty much all of your numbers and then you can play it across the board. You're going to try and understand what the revenue buildup is going to be. So we'll have a categorization of all of these things. Let's talk about the cost sheet also as here, right? As your cost sheet will also end up increasing, you'll have certain assumptions that you'll have to do, and we'll build a cost sheet, which links basically to your total COGS for that matter, as well as other expenses. Working capital changes, we're going to look at that element also as well. And we're going to have to take a certain amount of assumptions, and that gets reflected pretty much across the board over here, right? Same thing's going to happen. We have, of course, for depreciation as well as amortization, we've got quite a few tables here that we need to calculate. What do we really do? How do we end up really calculating those capex points and depreciation points is something we'll see. Pretty much going across with intangibles, you're going to go with shareholders' equity as well. We look at the debt structure for a bit, and then we're going to eventually see we've got shares outstanding. That's a simple table that we have kept here. In terms of exposures in DCF, we're not going to look at any of these elements right now. What we're going to do is we're going to have DCF covered up pretty much in the next session itself. So we're going to start across here. Now, the first thing that is telling us in the income statement, let's go gradually one step at a time, is telling us to be able to recognize revenue. All of these elements here that we see, we've got a summation of all of these different points, right? It's going to be a summation of net revenues as well as other revenues. Now, where is this coming from? It's effectively coming in from here. Now, the first thing that you want to do is effectively calculate the sales growth that has happened over the years. And this is something that you want to do across the board as you go forward with it. So let's go across. We're going to do whatever the amount is here, and we divide it by the previous year, and you do a -1, right? Quite simply so, and you end up getting approximately 18.4%. So what we're going to do is just paste these formulas across the board, and we end up getting all the calculations that we require across the years. So we see there's obviously been a bit of a significant jump that ends up happening here across also as well. So that's something that you need to be mindful of. You can definitely go back into the statements and see, of course, how the actual elements work. But on the pretty much on the bill side of things, it's pretty much the data that they have given. So that's why it's effectively happening there altogether. So that's one thing that is happening now. And what you want to do is then carry it forward with some particular kinds of assumptions. We're going to carry them forward here, and we'll assume, let's say the revenue 2021 took a bit of an impact, right? And 2022 is then going to be a bit of recovery happening as well. But they're also a major player in the industry. Eventually, the base becomes low. So they'll grow 7%, assume, in 2022. And then it starts to gradually decline again. And then we'll assume that there's going to be a 2% growth happening year on year as well.